Hi everybody, this is Ospreyeye from mychartcoach.com, and in this video we're going to take a look at the stocks, a few stocks that were in play today. And first up there's HMNY. Okay, so the stock has been on an awesome run. It did close up 18% today. It hit over here, it hit nearly 39 for a high. It closed at 33 basically, just below 33 and after or during the regular session. There was an 8K filing out after hours, and the share price did react negatively. It closed just below 28 after hours, and so that's lining up with this green horizontal support line here. That the share price is likely to change in pre-market trading, so we'll have to see where it opens up. But right now it looks like it's going to be a gap down open. A bearish pattern had formed, bearish 3 gap ups reversal pattern, and so that was our clue that the chart was getting frothy. And then if you've been following our charts, we pointed out here on this monthly chart that the big level to break was going to be this 2005 resistance level from back here in the 30s, and so we knew that was going to be a tough level to break and that it could be a climax after this big run, and so the share price did come up and hit that level. And then today the news came out, and so it looks like it could cool down here. So the 30 zone is looking like at least a temporary top. This is a monthly chart, and this month's candle will not set until the end of the month, so anything can happen. The share price could push higher. We just need to see how the share price responds. To the downside, EMA 4 down here at 17 is the first major support level on this chart, which is just below the upper Bollinger Band at 19. So yeah, so the big level to break is going to be 30, and then if you look here, a doji did form today, and so that's another signal that the chart was getting frothy. And what you want to see now is you want to see this EMA4 support level hold at 25.94. Notice that the candles have been riding that level the entire time since resistance broke back here in the second week of September. So the clue that the chart's really cooling down is going to be a close below that level that's currently at 25.94. So if you see a close below 26, that's going to be a red flag, and you could see a drop down here to EMA 8 at basically around 21. For a big drop, if it does pull back and get some steam to the downside, there is a gap down here between these two candles, and so a drop down to the middle of Bollinger Band and down to 11 would fill this very small gap. Not sure if that would fill or not, but yeah, the bottom line is this has been one heck of a run. It's an epic run. There was a climax spike today. Notice how there's an increasing volume bars, and then there's the giant volume spike, and then you've got the doji following a bearish 3 gap ups pattern. Everything was signaling to lock in gains today. You also have RSI up here at 96. You have Fasto that's been above 80 for quite some time, and so we were just looking for a signal that was telling you the chart was cooling down, and that signal was here on the 15-minute chart. As you can see here, this is 3 days of trading. There was this really nice uptrend, and then today there was a gap up open, and the share price needed to break above that level to head higher, and it did here at 10:30. It closed above. That was signaling more upside potential. It made the high close at 10:45, and then it never made a close back above that level. 38 was the key level to break. It wasn't able to turn that level into support, and then yeah, and then it struggled here with this 37, and it pulled back. And what happened was you could see this red descending resistance line. It started a new downtrending channel, and so when the share price pulled back, it formed a ascending triangle pattern first, and what we were looking for was a break below the green ascending support line. And when that happened here at 12:15, that was signaling downside risk, and those that closed below EMAs 4 and 8, and the share price pulled back, and it actually came down, and it broke the middle Bollinger Band, and it broke the bottom of this uptrending channel. So these are all red flags here. Failing to break resistance was signaling it was cooling down. This candle right here was the big signal that the chart was starting to break, and then when you get the break below the middle Bollinger band and below the ascending support. That was another red flag. And then notice the candles came back up and they hit the descending resistance line and they failed to break above. They closed above at 315, but they dropped back below. The close below descending resistance and below the middle Bollinger Band and below ascending support, these were all red flags that the chart was cooling down and that it was a risk to hold since it was hitting resistance on the monthly chart, and since the daily chart had a bearish pattern and formed a doji following a gap up open, following 4 gap ups during an uptrend. So everything was telling you to lock in gains, and then boom, what happens after hours? Bad news comes. The share price takes a negative hit, and then right now the share price is down here at 28. Notice how that is the top of that was resistance from here yesterday on the 10th, and so if 28 breaks, what you're going to see is a drop down here to 24, and notice how that's the bottom of the new channel. See, it had the really long uptrending channel here, and then now it's starting a downtrending channel. Well, if the share price opens at 28 down here, the next support's going to be down here at the bottom of this descending support line, and so that's going to be putting this 100 simple moving average at 24 on deck. If it drops below the 100, then you're looking at the 18. So that's going to be the big support level. Look for potential technical bounce off of 24. Notice how the 24 is lining up with the key support up here. You've got 26 on this chart. So you don't want to see, if you're a bull, a drop below, a close below 26. It needs to get back above those levels. So yeah, so keep an eye on HMNY. It's definitely still in play. You know, when there were the bear crosses on MACD, that was a signal that the chart was cooling down. Yeah, so congrats to everyone that's been trading this. We'll have to just see how it plays out tomorrow. Just keep in mind that if HMNY does pull back, it's going to make a really good bounce play on the first bounce. Okay, so take a look at SRNE. This is another big winner for everybody. Congrats. Closed up 48% today. It's at overbought levels on RSI and Fasto. You had this big parabolic move on 80X. And so this has been on a multi-day run. Look at all those green volume bars in a row. Yeah, it's just been on this one heck of a run. And then you had the huge spike today, huge volume spike, and there was a push above the top of the gap. Notice the gap back here. And so we weren't sure if it was going to stall out there at the 200-day simple moving average at 293 in the top of the gap, and we were thinking 3 might be a temporary top, but it busted above and it ran all the way up here and almost hit the 300-day simple moving average at 410. So this is going to be the next big level to break. It's got to get through this resistance zone. Notice how this was big support back here in March, so that's going to be a tough level to break. If the candles do pull back, you want to see the top of this gap and the 200-day simple moving average turn into support. So really nice move for SRNE. Congrats, everyone. Okay, take a look at ORPN. Okay, this stock closed up 53% today. Really nice move. It's still below 70 on RSI, still below 80 on Fasto, so there's still some room to run. You've got bullish crossover here on 80X with plus DI really heating up. And so today, this thinly traded stock, look at the average daily volume, you know, very, very thinly traded stock. It had a big volume spike today, and then it closed above the middle Bollinger Band, the 150-day simple moving averages. It also closed above the upper Bollinger Band. If you look back here, the last 3 closes above the upper Bollinger Band, the next day was a red day and the candles worked back into the bands. So there is a potential for that to happen. If the candles do work into the bands, look at this 277, 272, 50-day simple moving average, 100-day simple moving average support zone is the key level to hold. You'd want to see a bounce off of that. To the upside, if it can break through horizontal resistance here from September, then you're going to have this 375 and the which is a high close from August, and then the 200-day simple moving average at 363 on deck. If it can break above both of those levels, then you could see that run up to $5 possibly if it can get through this 425 resistance zone. Notice how that was big support back in March. So keep an eye on ORPM. And then another one to keep an eye on is CRMD. This stock had a nice move today. The chart was breaking out above the bottom of the gap level. So this is a play that we've been following for a while. It has a nice uptrend going. Notice that you know, it busted above the middle Bollinger Band back here in August and got an uptrend going. It dropped back down. It held the 50-day simple moving average, and then when it got back above the middle Bollinger Band, that signaled the uptrend was back intact. What we've been looking for was a close above this bottom of the gap level. Okay, so it hit that level last week on Monday, but it failed to turn that level into support, and it pulled back. Well, today this was the first close back above that level since October 2nd. So if it can turn this 68 and bottom of the gap level into support, we're looking for a potential gap fill and a run back up here to dollar land. So the top of the gap and dollar land are the next targets if it can hold that 68 to 70 support zone. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.